Good afternoon. This is Markets at Noon. I'm Kavita Thapriyal. With me is my colleague Snehi Shah. And yes, in the next half an hour, we'll be talking about the mid-market situation that's trickling down in the market. And yes, we'll be joined by equity expert to help you navigate through all your market strategies. But then a quick market check where the weakness creeps into the market. We are close to very important support zones, 25,660 on the Nifty with almost 0.5% cup. Similarly, we can see Sensex almost 0.5% down with Bank Nifty down almost 400 points. The market breadth definitely is weakening now with NSE declines going to almost 1902 advances, only 966. Across sectors, we are looking at the weakness going deeper, especially IT and PSU banks were trying to hold on, but then yes, we can see weakness coming in over there. Also, broader market also following the major indices. On the loser side, we can see trend going in deeper in losses, 2.5% down now. M&M almost 2%. Adani Enterprises, Interglobe, Ultratech, and VEL. We are looking at almost 1 to 1.5% cuts. ONGC. On the gainer side, ONGC almost 2% up with Infosys, Hindalco, TCS, Doctors Reddy, and HDFC Life almost 0.5% up on the gainer side. But yes, it's a sentiment weakening session right now that we can see during the midday market. But let's get an expert view, and we're also joined by Rahul Sharma, who's the Director, Head Technical Derivatives Research, JM Financial Services. Rahul, hi, afternoon. Welcome to the show. Okay, so now the market is almost at very crucial support zones, which earlier we thought could be a support zone when the market started today. But yes, after 3 days of doing good with positive sentiment and breaking more important resistance level, we are also looking at market settling down to 25,650 right now. What's the immediate support zone according to you?
Yeah, so as we speak, we are actually at a support level. 25,650 is where the support for the Nifty is. It's a cluster of moving averages. The 520, 50-day moving averages are also in close vicinity. And my sense is if we do manage to take support for the second half today at this mark, there could be a bounce back in the intraday as well. However, if we look at the way today's candle has been, it has been a relentless sell candle on the, continuously the markets has been in selling mode since we've opened higher today. Post that, it has been sliding down. And the reason for that has been essentially lack of leadership from any of the index components. And at the same time, there is selling pressure seen across the board as well. So my sense is if 2650 breaks, then it calls for another round of weakness, which means another 100 points can be taken off probably in a day or two. However, the best thing to do in such a market is to be a day trader, not carry positions overnight. There is a geopolitical scenario brewing with the Iran and US as well, so it could be a fierce reaction when that happens. So the best thing to do is to be a trader at this point in time. And what is looking like a hiding ground in this market is PSU banks. They have been doing well, continue to look good on the charts. Punjab National Bank, PNB, is our top pick in this kind of a market. We feel that the stock is ready to move towards targets of 140 on the upside. One can buy PNB at these levels with stop loss placed at 122. And we feel that the overall strength in PSU banks should remain regardless of volatility in the Nifty, which has been a hallmark of today's session.
Okay, so that's what's looking good on the charts to you. Rahul, hi, good afternoon. This is Snehi also joining in. Talk to us about some sectoral moves right now. On an overall basis, it's realty that's taking it on the chin today, about a 2% cut now on realty. FMCG, auto, energy, finance, all of them are taking a hit. Would this kind of a decline or slight pullback in these indices make any of the stocks from these baskets look attractive for a fresh entry at this point?
Yeah, that's a tough one, given the kind of choppy nature that we've had in the market. I think if somebody has to take a bet on the sectoral view, then it has to be the public sector enterprises. The PSE space is still pretty much robust. If you look at the PSE space, either one can look to play with the top tier names like NTPC, Power Grid in this space, or there is an ETF called the CPSE ETF, which can be considered to play on this possible up move in the next few trading sessions. So it's a very narrow market, it has been for most part of February so far. And I think from a sectoral perspective, PSE is the place to go. Look to buy on dip. Today we are seeing it's back to the support levels. Maybe another 0.5% from here, and the risk reward would become even better. So these are the areas which are looking good. As far as the reality is concerned, it has been a struggle any which ways. We're seeing reality index sort of failing to find its feet. I think it's better for Nifty to eventually give us a breakout over 26,400 for the rest of the market to sort of pick up and go in a big way from here. So at this point in time, be very selective. PSU banks and public sector enterprises are the go-to sectors which are looking good on the long side. And as far as shorting is concerned, in case we do sustain below the 25,650 mark on the Nifty today's session, there could be another 100-point sell-off that we may see in the Nifty index today, tomorrow.
All right, Rahul. So, Nifty PSU Bank and PSC should be the sector on radar, and definitely a very crucial level. If the market goes below 25,650, then 100 points cut furthermore. Thank you so much for joining in today. And with that, it's time for a short break. But then post that, let's get you more experts and definitely more managements talking about stock-specific updates.